TraderCobb Crypto Podcast. This is the TraderCobb Crypto Podcast.
Today's episode of the TraderCobb Crypto Show is proudly brought to you by TraderCobb.com. That's TraderCobb, COBB.com, where you can go across, find your crypto trading education with strict written checklists. Okay, so interesting. Market's holding again. What we've seen today was what I kind of thought we might see after the Bitthumb sort of bust. We saw the market fall, pull back since then, back to exactly where it was. And if you follow me across my social media accounts, you'll have known that I put out a bit of a call on a particular trade that I was stalking, because I hadn't actually set up at the moment that I put the call out. Because what I tend to do across MarketView, which is a subscription service, which you can actually go and get a free month on that, to be fair. You go to tradercobb.com/free, and you can get a free month there. You've got to put in all your details and everything. And, you know, if you do stay on, then yes, you will be charged the next month, but you can get on and have a free month, see what it's all about. I put a trade call out there with a complete breakdown of the trade on Euro. I keep saying Euro. Ethereum against the US dollar. And it did set up beautifully. It has achieved, or I actually haven't gone into my account to check it, but it looks, it should have achieved one-to-one very, very easily right now, which means it's either a profitable trade for many people, including myself, or at least I've scaled out, minimized my risk, and now I have 50% of the position open with zero risk, which means you can basically leave it go and hopefully run onto some major gains to the upside. And it's been my first long trade in a while across the top 10. I'll be honest with you, we haven't seen a great deal go on for a long time. And if I tell you this, right, I've been stalking the market for quite some time. There's not really been any fantastic opportunities. But I can tell you this, right? Yesterday when we did get one quick trade, bam, Euro against, oh God, I keep saying Euro. Ethereum against the dollar. She set up, kabam, and whooshka, we took the trade and away we went, a profitable trade. See, it's not about taking lots of trades, and this is something that I do see people make mistakes on. It should be more focused on the quality of the trade, not the amount of trades. Don't let that fool you. Okay, it's not about the amount of trades you take, ladies and gentlemen. It is about the types of trades you take, and I cannot stress that enough to you right now. So, with that being said, the markets didn't do a great deal yesterday. It as I say, we did see that fall. With Bitcoin sitting currently down 0.25%. At one stage, it was up about 1%. We do see some other markets in the top 10 having a bit of a dip overnight. Cardano being the main one. The rest of them, Neo, also having a bit of a fall there. But it's looking like the damage that was done from the Bitthumb hack has been sort of corrected. We're not looking too bad out there right now. We're just holding, and again, we've gone back into a holding pattern, with the one exception that we may actually have. If we can set a new higher high on Bitcoin, we'll also have a new higher low, which will add weight to that trend. So, patience, guys. I've had to have a lot of it. I've had to use a huge amount of patience over the last few weeks, because let's be honest, the market's been sideways. And I'm a trader that has a structured approach. I know what I'm doing. I know what I'm waiting for. I don't go looking for trades, guys. You know this. I let the trades find me. And when they don't find me, that's it. I just sit back and I wait until they do. Don't be someone out there who's too eager to get involved. Enthusiasm is a wonderful thing. Do not get me wrong. I love enthusiasm. It's contagious, it's infectious, and it's absolutely good way to live your life. But don't let the enthusiasm outweigh the logic and the structured approach that you must take. Enthusiasm's good if it's contained, understood, and channeled into things that are positive. Okay, it's really, really important that you focus on doing the right thing. Rewards will come when you do the right thing. Good traders get good results. That's a fact. Good traders get good results. The market doesn't owe you anything. People that say, oh, I've been trading for 7 years, I definitely know what I'm doing. It doesn't mean they're making any money. I hope they are, because that's a damn long time to be unsuccessful. But the point I'm trying to make is the market doesn't owe you anything. You can come up to speed really quick. You can become a very good trader in a very short period of time if you allow yourself to go through the lessons and learn from each of those lessons. Sometimes going backwards is going forwards. You've got to make the mistakes to not make them again. It's really important that we all focus together. If you need some help, guys, you know where to find it. Go to TraderCobb.com/free. Why not just jump on and get a free month? Plug yourself in, have a look at what's going on. If you don't like it, tune out. If you do, stay on, do some courses. Let's get you moving forward and give you some structure to your trading strategy. So, guys, today, again, a relatively quiet market. I've got that trade on Ethereum against the dollar, which I'm very happy with. I'm looking at a couple more. I'm going to cover those in my Market View subscription in just a moment. So get across, get onto that, and I'll speak to you again very, very soon. Very soon. I want to go through and talk to you about how we think in probabilities. What are probabilities? Why do we use them? And how do we benefit our trading from this? So it's very, very important because I say it often that as a trader, all we've got is our probabilities. So if that's all we've got, we better be pretty bloody good at using them and understanding how to use them. So how? How do we start to think in probabilities, and how do we train our mind to think in probabilities? Now, today's show is inspired by one of the members in my Slack community. He's going through all the courses and he's in the group there now. His name's Matt. I'll just keep him as Matt. I won't say his surname. His question was more specifically how to train our mind to think in probabilities, and I'm going to cover it now. So thank you, Matt. And if anybody else has any suggestions, please do let me know and I will see if I can get something out, because this show is about you, educating you and helping you to become the best trader you possibly can be by sometimes nominating some areas that you may not be familiar with that you need to become aware of. So, thinking in probabilities, how do we do it? Well, as a trader, the reason I've got my written checklist, my essential factors, and my bonus factors is quite simply because it increases probabilities by having the checklist. So, let me take you through this. Essential rules are there to make sure that we've at least got it, as we would sort of suggest, the essentials, and the bonus factors increase the probabilities on top. So basically, what we're going to do here is we're going to break that down into a logical and easy way to understand. Probabilities are how we trade. You match a high probability outcome with risk management, and you've got something that you can trade from. Now, don't get this wrong. Don't get this wrong. You can still make money if you have a low probability trading outcome, provided that the reward to risk ratio is high. So it's not just about win-loss ratios, it's about win-loss ratios and reward to risk ratio. So let me go back to probabilities thinking. Okay, you need an edge to make money. If you know that 60% of the time your outcome is going to be X over 100 trades, you know that about 60% of them you're going to get the win that you're after, or the outcome that you're after. Now, once you've got an edge and once you have that probability, you can start to trade around that and manage your risk. So when we're thinking in trades, people look at one trade and they feel like, it's a profit. Yes, that's great. It's a loss. Oh, that's not so good. Now, that's what an amateur trader does. They let the outcome of a trade dictate their emotion in that moment in time. A professional trader looks at each trade as being one trade within a sea of many. Just the same as, one drip in the ocean means nothing to the ocean. Not to that drip of water, it's everything. Well, you got to think like the ocean, not like the drip. And you got to start to focus on the bigger picture. Once you find a probability, you execute that over a large sample set of trades to produce, your outcome and your income. All right. So how do we actually start to think in probabilities? Well, the one thing that you've got to do is you've got to stick to your rules, okay? So if you have a losing trade, it doesn't matter. Once you place a trade, whatever happens, happens. You cannot influence the market. You can only influence your own decisions. So if we go through a coin flip, just to give you a really easy understanding example. If you're going to flip a coin, one side's heads, one side's tail, nothing tricky about it, just heads and tails. We've got a 50% chance of a coin landing on a head and a 50% chance that it lands on tails. Now, if the coin lands on heads, you're going to win $10. And if it lands on tails, you're going to lose $10. If you flip the coin 100 times, you'd expect that the number would be something around about $0 because it's a 50-50 probability that it will land on either heads or tails. It might be $10, $20. It might be a little bit either way, but the more we flip the coin, the more likely it's coming back to zero. This is essentially the most easy way to explain probabilities because it is a dead set 50-50 chance. The more times you flip it, the more times the outcome will be 50-50. Okay? So, in that case, we're not going to make any money, are we? What if we change a single variable? Okay, and this is how the risk reward comes into this as well. This is how we start to think as a trader. If we change a single variable, obviously on a 50-50 coin toss, we can't, we could change it and make it, we could cheat. We could have two heads, or we could have two tails, and we could always win, but that's not going to last very long, okay? So we're going to keep it even at 50-50. We're going to keep the probability of success at 50%. But what we're going to do is we're going to change the reward. So if the coin lands on heads, you're going to win $20. And if the coin lands on tails, you're going to lose $10. And my question to you is this. It's a 50-50 chance. If you win 20. If you lose 10. Would you play this game? Ask yourself that question. Give me that answer. The answer should be yes. It should be yes. Because what you've done is you've changed not the actual game itself, but you've changed the outcome. Now, if you can get a 50-50 coin toss or a 50-50 outcome on anything, but when you win, you get twice as much as what you lose when it goes the wrong way, you have an edge. You haven't got an edge in terms of the strategy and the probability of it landing on heads or tails. You've got an edge because your reward is greater than your loss. Now, in this case, in the last case, it's 50-50. We flip the coin 100 times. We come back to the figure of 0 because it's 50-50 and it's $10 loss, $10 win. Everything's even. In this case, we've got $20 win, $10 loss. Over the 100 flips, let's say we get 50% heads, 50% tails. Now, with your $20 wins, you net a $500 profit. That's how probabilities work, and that's how reward to risk ratios work. Now, in trading, we're not looking for something that's 50-50 unless we can have a high probability of getting a larger reward multiple. Now, what these trading strategies that I teach create is a high probability of success. It is not a 50-50, and I cannot give you the exact percentage number because it's different for everybody. Everybody's different. The trading strategy, if you have a good one, it doesn't mean you're going to get the same results as me or your neighbor or whoever else is using it. But with these strategies, you're looking, if I look at a one-to-one, okay, and go through a lot of the trades that I've been putting up in the Slack group and others that have been putting it up and taking in what other people are saying and just sort of do a very rough estimate, I'd say you're looking at about between 60 and 70% on a very conservative estimate of at least getting one-to-one. That means if you're risking $10, you're going to get your first target of $10. Now, of course, a lot of what I teach is to scale out, which means once you get your first target, you scale out so you're in a risk-free position because everything always is about minimizing our risk. If you've got a 70%, 60%, or even 50% outcome of getting one-to-one, you've still got something to work with. It's then we make our money after one-to-one, isn't it? It's when the market moves further and we trail our stop up. It's when we decide we're not going to go for a one-to-one, or we'll go for a one-to-one, then we'll go for a final target of 6-to-1, 7-to-1, 10-to-1, whatever it may be. So it's a little bit more different than a coin toss. But thinking in probabilities is about focusing on a larger sample set. It's not about focusing on the one trade. One trade following a simple set of rules that is very structured, it's either going to win or it's going to lose or it's going to break even, depending on how you manage that trade. But over a large sample set, if you can be in the right headspace, with the right routine, the right structure, and execute flawlessly, you can be pretty comfortable that you're going to make money over a large sample. So that's why it's really important to take screenshots of your trades and report on your win and losing trades. And also at the end of each period, so maybe every 10 trades, 20 trades, 50 trades, 100 trades, see how many were flawless, how many were not, and see what the outcome was for that. That way you can really drill down and work out what areas that you can actually work on to increase your probability going forward. So guys, I hope that's been beneficial. It's how to think in probabilities and how to relate that to trading. Have a listen to this a couple of times if you need to. Don't forget this show is brought to you by TraderCobb.com.
Trader Cobb Crypto Podcast. This is the TraderCobb Crypto Podcast.
Guys, the market is a fun place to be. Trading is epic, but it can also play tricks on your mind. Now, for those of you who have been following me for a while, and for those of you that are new, A, hello, B, there's a few things more than just technical analysis that we need to understand. I've been trading for 12 years now, and I can tell you right now that never have I put more weight in the psychology. And it seems to be that the longer you've been trading for, the more you how do I put this? The more you actually understand how important your own mindset is, and it's such an important part to your success. And that goes across any walk of life. It really doesn't matter whether or not you're, it doesn't matter whether or not you're in business, whether you're a sport, like an athlete, whether you're trading or what it might be. But obviously, I'm trading, so I'm going to discuss it around trading, your mindset, the psychology of trading, how things work and how your head can be ultimately your undoing or what creates success. Now, I can tell you from my point of view, for when I started trading, I came into trading like with an entrepreneurial background in mind, right? I'd run a little business where I was from. I was 22 when I started trading. And basically I was in a position where I was like, okay, well, I can do things. I can make things happen. I can make things work. I had some money. Not a huge amount of money. It was a huge amount of money to me then, but I had enough money that I could back myself. Now, of course, I was also working, and this is when I was in London. I moved to London. This is when I was working. I decided I was going to get into trading. I was going to work my day job, and I was going to trade on the side until trading actually was able to buy me out of my work. Now, that journey began, 12 years ago, like I said. And what I did was I went into it with that entrepreneurial spirit thinking, I'll just work it out. I'll spend so much time learning about technical analysis. I learned all about technical analysis. And that's why you'll find in my courses, it's not just about technical analysis. I'm not going to teach you about how an ascending triangle works. I'm not going to teach you about a double bottom because it's a waste of time. You don't need to know these things. It really is a complete and utter waste of your time. Same with sloping trend lines. You're not going to learn how to use them because you're not going to be using them if you trade my strategies, because I want you to make money, and that doesn't help. I focus on what works based on my experience, guys. I'm not saying that there's not other ways to do it, but I'm telling you right now, for years I traded with sloping trend lines, and the second I got rid of them, my results did change and they got better. So it's a psychology that really pushes you along, creates a good day or a bad day. Now, it's really, really interesting because from my point of view, when you're looking at the market, you're always right. Okay, you never take a trade that you think is going to lose. You always take trades that you believe will win. But why is it that when you come back, if you're doing the right thing, you come back and you look at your screenshots. So, when I say doing the right thing, I mean taking screenshots. And you look at those screenshots and you go, man, what was I thinking? That didn't fit my rules at all. Like, here's my written checklist. I'm now going over that, and I can totally see that I was wrong. My mindset was wrong. It just wasn't the right thing to be doing. It's just that mood that you were in at that time. And I say to people, consistency in trading is absolutely a must, and that's not just consistency in your execution of the specific trade, i.e., following your rules. It's also the execution from a position of the same mental. The same mindset position. So if you wake up one day, this is why if I'm feeling really crap, I don't trade. If I wake up one day and I'm feeling terrible, I'm not going to be sharp. I'll probably read the markets differently to if I was feeling really good. So that's where your psychology comes into it. It's really, really important for you to understand that the psychology of trading is going to wrap your day up or down. What I mean is you're either going to feel good or you're going to feel bad, but you've got to get yourself into a position where you're in the middle. Now, if you can't do that, i.e., you wake up, you're not feeling very good, you're a bit sad or you feel a bit sick or whatever it may be, then your best bet is just to go, okay, well, I don't feel good. If I don't feel good, I'm not going to trade, because I need to be in the position where I can put all feelings aside and focus and trade objectively. Now, if there's something that's getting in the way of you focusing and being objective, and that's one of the biggest elements to successful trading wiped out. Now, if you're going to wipe out a 33.333 recurring part of your trading, i.e. you've got trend, you've got strategy, and you've got yourself, so it's 1/3 of the puzzle to being a good trader. If you cannot get into that objective mindset, if you don't feel up to it, then you walk away, because you're decreasing you're increasing your risk of failure by 33% if your head is not in the game. So I say it to people that are in the courses. I say it again in my market view. I say it again on all the free content. I say it again and again and again. If you're not up for it, walk away, because this is your money you're working with. I don't say playing with, because it's not a game. You're trading with your money. It's up to you. You can't blame anyone else. So stop yourself from getting into that position of being mediocre, of being average, that if you don't feel good, if your head is not in the right spot, walk away, because your psychology, as I say, can make you or break you, guys. I cannot stress that enough. The same goes for if you look at the market and the market is down and your portfolio, let's say your portfolio is heavily down. Is that a good time if you're feeling really sick or nervous or freaked out? Is that a good time to be trading? No. That doesn't mean you can't trade the whole day. It means you need to have some sort of routine to get you into that mindset. That's why I've got routines for everything. That might just be going for a walk for half an hour, whatever it may be, going for a surf. I don't know, whatever it is, go play your guitar, go listen to music, go meditate. Whatever that might be to get you back to that point. You got to go do that, because if you're not in the right headspace, you're not going to make the right decisions, and it's not going to help. It's just going to spiral and get worse. So guys, I hope you have a fantastic day. Don't forget that this show is brought to you by TraderCobb.com, where you can find all your trading education needs for crypto at the website. Free content galore. Go and check out the 3 strategies: the Bitcoin breakout, the crypto crowd, on the Fibonacci boost. TraderCobb.com. TraderCobb.com. Join TraderCobb.com now.
TraderCobb Crypto Podcast. This is the TraderCobb Crypto Podcast.
G'day everybody, it's Trader Cobb here. Don't forget to follow me on Twitter at TraderCobb, C-O-B-B, as well as on Facebook, and subscribe to the YouTube channel. Also, don't forget to go to TraderCobb.com to join up to the subscription list, whether it be free or the pay list, and get all my courses there, guys. All the links are below. Guys, what type of trader are you? This is super important. I know that there's a lot of hype and excitement out there, and I know you want to get trade tips, and I know you want me to talk about tokens, and I know you want me to talk about trades. But before I do any of that, it's very important that you start to build a base out for yourself. Now, I teach you all this on my courses in great detail, but this is part of the free content. I want to give you a little snippet of what's in there when you do join our programs. What type of trader are you is super important, because it needs to be designed around you. I can't tell you what to do. I can give you the strategies, I can give you the discipline, I can give you the checklist, I can give you a great deal, but I can't change your life as far as your commitments to other things. For example, if you've got kids and you're working a 9-to-5 job, you probably only got a couple of hours in the evening where you can actually look at the charts. So you need to then decide how you're going to best utilize that time, not just best utilize it, but execution-wise utilize it. Okay, so you need to be efficient. You're not just going into 2 hours of your trading time to stare at markets, stare at screens, and hopefully find some trades, because you'll find them if you want to. No, you've got to set a structure in place. You've got to ask yourself what's going to give you the best chance of success, and we're going to cover some of that right now. So, what type of trader are you? You've got to ask yourself the question. That's very interesting to ask this to a newbie, because often what happens is you don't really know, because guess what? You're just getting started. Hey, and that's cool. I get that. Absolutely, 100%. I understand. You may change over time. For example, many people, when they start out, they want to trade intraday time frames because it's fun, it's exciting, it's sexy, it's wham bam, it's all happening right now, right in that moment, and they get instant gratification. But you also have more trades usually. You've got less time to make decisions. And often, it can be a baptism of fire. Now that may not be a bad thing because you learn very quickly, but just make sure you're risking small amounts. Often people will then move and morph into the trader that actually becomes successful. And that person will change over time. So I want to have a look at a few things. The questions. What's it going to be? The question is day trading or swing trading? Full-time or part-time? Don't be afraid to change because that's going to happen. Okay, it's going to happen. If you're there to trade full-time, then you better get some education. And if you haven't already done my courses, then you probably should because it's an absolutely important thing for anyone full-time. If you're part-time, I also suggest you do the same thing. I've got the prices super low, so it's very, very accessible, but you do need to get some structure to your trading. We're going to first of all have a look for you right now whether swing trading or day trading may be for you. You make the decision. I'll take you through it. So, trading styles, swing trading, might be open for a number of days or weeks. You're kind of looking at the 4 hour, the daily, the 8 hour. I use a 12 and 16 hour as well. These are your time frames. So you're looking at the higher time frame trends. Now, what this actually does is it gives you more time to think, to go through your checklists, to double check. If you're trading on a 5-minute chart, things happen very, very fast and you haven't got much time to make decisions. And that's fine if you are already very good at what you do and you're very fast at your execution and you're very precise. Me, personally, I'm a pretty laid back character. I like the ocean, I like bodyboarding, I like fishing, I like spearfishing. I like to take it easy where I can. So my style has morphed more into swing trading because less is more in my world. I prefer to take less trades and look for bigger returns. So swing trading suits me down to the ground. Not to say I don't intraday trade, I just prefer to find swing trades. So that's swing trading. A bit more time to make decisions. You don't have to be there as often. For example, if it's a 4-hour candle, well, you only need to be there at the close of the 4-hour candle. So every 4 hours you can check it. If it's an 8-hour, well, every 2 4-hour candles, an 8-hour closes. You get the picture there. You can start to understand how you may structure your day. With day trading, it happens much, much quicker. You might be in the trade for minutes, maybe even just seconds. You're after a small move, bam, in, bam, out. You're running 1, 5, 3, 15 minutes, half an hour, even up to the hours. Now, this is the sort of stuff that is very, very, very fast-paced. I don't typically think you should start there, but that being said, what do I know, right? You need to learn from your own mistakes, and mistakes are good. Just don't lose too much on them and manage your risk at all times. So whether you're a swing trader, whether you're a day trader, what I'm going to ask of you is this. You share my content with all of your friends and family and everybody online. Click the links below, share my Facebook, share my Twitter, share my YouTube, and more importantly, go to TraderCobb.com and subscribe for your free content. Jump on the courses, jump on the monthly video subscriber list, and let's continue to work together. I do as much free content as I can, guys, but ultimately, all the real gold, the complete structure with all the checklist is in the paid content. I've made the prices very acceptable so you can get in there and get it done. And please, let's share this content to the world. That is all I ask of you. Have a great day and speak to you all again very soon. Bye for now.
The TraderCobb Crypto Podcast. Check out TraderCobb.com because experience matters.